There is no broad, off-the-shelf yacht loan market in Turkey the way there is for cars or homes. Most purchases along the Turkish coast are still settled in cash or funded from outside the country. In the next few minutes I will cover the 4 funding routes buyers actually use, what lenders want to see, realistic timelines, and the costs on top of the loan. There is one detail that decides whether a boat can be financed at all, and I will come back to it. Some Turkish banks will consider lending against a vessel, or more often against other assets you already hold with them, but terms are case by case and usually reserved for existing private banking clients. For most foreign buyers, the practical answer is to secure finance where you already bank, then complete the Turkish purchase as a cash transaction from the seller's point of view. That distinction shapes your timeline. Money you already control can close quickly once the survey is clean. A fresh marine mortgage against the boat itself adds underwriting. Knowing which route you are on before you make an offer keeps you credible with the seller. Route 1, a marine mortgage, a loan secured on the yacht itself, usually arranged through a specialist marine lender in your home jurisdiction. Expect a deposit of roughly 20 to 40%, terms of up to 10 to 15 years on larger vessels, and the lender registering an interest against the boat's flag. Route 2, a Lombard or securities-backed loan, borrowing against a portfolio held with a private bank. Quick and flexible, but the lender can call the loan if your collateral falls in value. Route 3, home equity or refinancing, releasing capital from property to buy the boat outright. Simple for the seller, and you carry the depreciation on the yacht directly. Route 4, cash. Still the most common route on the Turkish coast, especially for pre-owned boats and gulets, and often the strongest negotiating position. Whatever the route, the paperwork is broadly similar, and having it ready signals you are a serious buyer. Proof of identity and address, plus clear evidence of income and net worth. Source of funds documentation, because on a large purchase both the lender and the bank handling the transfer will run anti-money laundering checks, and Turkish banks will ask where the money originates. An independent survey and, on a used boat, a sea trial, so the lender can confirm condition and value. Clear title and a lien check confirming no outstanding debt is registered against the vessel. And the boat's VAT status, flag and registration details. Timelines depend on the route. A purchase funded from money you already control, cash on deposit, a Lombard line, or released equity, can complete within a couple of weeks once the survey is clean and the funds clear. Arranging a fresh marine mortgage against the boat is slower, because the lender runs its own valuation, title, and underwriting checks first. As a rough guide, allow a few weeks for a straightforward marine mortgage and longer for an older or unusual vessel that needs extra scrutiny. These timelines are indicative and as of filming. They vary by lender, boat and flag, so confirm the schedule early and build it into your offer. Now the costs, and these are indicative only, as of filming. They vary by lender, vessel, flag and season. Deposit, roughly 20 to 40%, higher for older boats or a new lending relationship. Interest, varying widely by market and currency, fixed or floating, so shop more than one lender. Arrangement and valuation fees, typically a small percentage of the loan, plus legal costs to register the lender's interest. The independent survey, which scales with size and scope. Annual insurance, hull and third-party cover for your cruising area, which lenders require. And then the running costs that do not pause while you repay, berthing, maintenance, crew, winterizing and fuel. Here is the detail I promised. Finance sits on top of the usual diligence, and skipping that diligence to close faster is where buyers get hurt. A marine mortgage lender needs a flag it recognizes and will register its interest there, so flag, VAT status and clear title are not paperwork at the end, they decide whether the boat is financeable at all. Older vessels and unusual builds are harder to finance, which narrows the pool. Run a lien search so you are not inheriting someone else's debt. Line up berthing early, because a marina berth for the size and season you want is not always available. And be realistic, a yacht is generally a depreciating asset with real running costs, so borrowing magnifies both the convenience and the exposure. If you borrow in one currency and earn in another, stress test the exchange rate before you sign. Turkey Boats is an independent yacht brokerage, not a lender, tax advisor, or surveyor, so we do not provide credit and we do not give legal or tax advice. What we do is represent your interest through the purchase while you arrange finance with the right professionals, sourcing the boat from our network, coordinating the independent survey and sea trial, running the title and VAT checks, and managing the paperwork so your lender's conditions are met without delays. Afterwards, we can handle berthing, maintenance and yacht management along the Turkish coast. If you are weighing how to fund a purchase, start with a budget that covers deposit, fees, insurance and running costs, then talk to a lender and to us in parallel. The full written guide is on our blog, and the link is in the description.